Hey everybody, David Stryzewski here. Now today, I want to talk to you about what I'm calling the silver and gold wake-up call. Because something extraordinary, and in my opinion, historic, is happening right now in the precious metals markets. Did you notice it? See, gold today is at record highs, but silver's hitting levels that we have not seen in decades. But listen, this is not the end of the move. It's literally just the beginning. And for anyone who cares about their savings, their retirement, and their long-term financial security, we need to talk about why. So let's take 8 to 10 minutes here, break this down clearly, logically, and comprehensively. Here we go. Let's start with something educational. For thousands of years, gold and silver had a natural relationship. This was known as the gold standard ratio. And in most periods in history, that was a ratio around 12 to 1 or 15 to 1 ounces of silver to 1 ounce of gold. Now, why? Because before modern machinery, nature delivered it that way. Now, today, with modern mining equipment, the actual geological extraction ratio, which I like to call the mining ratio, is around 7.5 ounces to 1 ounce in 2025. That's nature, that's engineering, and that's the modern capability that we have right now. But the price ratio today is actually closer to 75 ounces of silver to every one of gold. That means silver relative to gold is trading at 1/10 of what the earth actually provides. This is not normal. This is not stable. And this is not sustainable. This is a wake-up call. Silver is not just undervalued. It is mispriced, misunderstood, and mathematically, the equation is broken. Now let's move to what's happening right now in the real world, because this is where the story becomes very dramatic. So silver inventories at the Shanghai Futures Exchange, perhaps you've heard of that before, are down 86% from their 2020 levels. This is the lowest time frame in 9 years. The gold inventories in the Shanghai Gold Exchange are now also down 83% since 2021, now at the lowest rate in 10 years. This is not a seasonal idea. This is not routine. This is a massive structural drain on the system. So where are these metals going? They're going straight to London, one of the world's biggest physical bullion hubs. Now, you might think, why London? Because London is running dangerously tight on their supply. A Chinese analyst actually said it bluntly. The tightness is being driven by the rising exports to London. So there you go. Think about it. Recently, the CME group suffered a major outage, temporarily freezing their orders, their pricing, and their futures activities.
CME reported a cooling issue at its data center. The company says it is working to resolve the issue and will advise clients of pre-open details as soon as they are available.
But let's just be honest. This outage occurred in the middle of one of the tightest physical silver markets in decades. And many analysts, including some very rational ones, are saying, hey, hold on. Outages don't happen during low volume or calm periods. They happen when the system is under pressure. And that's reality. And what pressures could that be? Well, exploding physical demand, the draining of the warehouses, rising delivery requests, thin liquidity. There's massive open interest out there right now, tight spreads on the difference, heavy algorithmic traffic trading in and out, and the clearinghouses are getting strained. So sometimes what gets labeled as an outage is the system actually trying to protect itself under extreme pressure. You don't need to be a conspiracy theorist to recognize that decades of paper pressure may finally be cracking in this metals market. See, on a normal day, there's no problems. But during a squeeze, things tend to break. This outage was, in my opinion, a symptom, not just a glitch. Now let's talk about the charts for a second. So silver hit an all-time high of $59.43.5. Okay, so that's massive. After digesting that move, it created what I call a cup and handle formation. Now, this is a bullish continuation pattern. If silver breaks above the 59.43.5, I think that we could see prices go to $68, maybe even $82 in a very short time frame. And based upon the structural pressure I'm about to explain, those levels might not be the end, but rather just the beginning. So let's talk about the futures market for a minute. Now, I know this is a little bit confusing, but just go with me here. In November, we saw 100% of gold contracts went out for delivery. That almost never happens. That was just November. Typically, most traders roll their contracts forward because they're trying to hedge. But now we have very few that are standing for that hedging, and they're just wanting delivery. Now, silver actually remained pretty quiet in November, but March 2026, that is a completely different beast. See, this is the month where the real silver squeeze is likely to begin. And here's why. We've got these things called open interest contracts, better than 92,000 of them. So for the reference, one contract is the equivalent of 5,000 ounces. So we have 92,149 contracts times 5,000 ounces. That is 460,745,000 ounces, or 14,330 tons of silver. I mean, holy smokes. Now, typically, we might see 1 or 3% of these contracts stand for delivery, but let's just assume that 5%, 10%, maybe even 15% of those contracts, which is better than 2,000 tons worth of silver, stand for delivery. The COMEX cannot deliver that, not even close. If demand spikes, if confidence breaks, if hedge funds, sovereigns, industrials, they have this need for the silver delivery, guess what? Somebody's stepping in, but somebody's stepping out, and somebody is going to get steamrolled. This is why I call March 2026 the battlefield for the West. But the real war might end earlier, when China runs out of silver. And folks, the clock's ticking on that. We just talked about it. If this happens, silver isn't going to $70 or $80. It's going north of 100 in short order. Now, let's unpack this idea of demand for a second. Everyone knows that silver is essential for AI hardware, solar panels, the number one user, electric vehicles, data centers, semiconductors, the list goes on. There's a new part almost no one is talking about. The global military complex just became the biggest buyer of silver. See, warfare is very materially intensive, electronically intensive, and electronics intensive. See, silver's crucial for circuit boards, electrical contacts, weapon guidance, targeting systems, missiles, torpedoes, buoys, naval sensors, autonomous submarines. The list goes on. One defense industry CEO put it this way: the armament industry is now expanding its capacity in an area where a crucial metal is no longer available. Think about that. They said no longer available. Like not expensive, not tight, not in a bull market, no longer available. And here's the kicker. U.S. Defense Department silver stockpile went to 0 in 2001. We had silver reserves, and then key word is that we had them, we no longer have them. See, when militaries enter a bidding war for metal that they are already in a structural deficit about, the outcome is inevitable. The price of silver has only one direction to go. China's draining its gold and silver. London is dangerously tight. The COMEX delivery pressure is rising. The CME outage just showed up in system stress. Industrial demand is exploding. Military demand is accelerating. The mining ratio is completely out of control. The dollar is weakening. Debt is skyrocketing. And silver is in a structural deficit since 2020. See, this is a technical chart setup for a massive breakout. And again, I believe March 2026 is the looming battlefield. This is not normal. This is not a temporary thing. This is not noise. This is the global repricing of real assets in literal real time. Not because of hype, but because of math, supply, and necessity for having it. See, this is the silver and gold wake-up call that it's here right now. Now, if you're within 5 to 10 years of retirement or already retired, this is the moment where one mistake could literally change everything. This is not a buy and hold, park and pray, hope everything will be okay moment for your portfolio. This is an area that requires strategy, requires agility, hard assets, real tax planning, risk management strategies for the 21st century, and a team that you can trust to do it all. Because the world is changing fast, and your financial strategy must change with it. Now, if you're listening to all of this and thinking, hey, David, I need a real plan. I need someone who understands this era. I need to protect my retirement. I need some clarity on these metal miners and what to be doing with income and taxes. That's exactly what my team and I do every day. We help American families gain confidence knowing that their money is positioned for reality, clarity to understand how these moving parts will work, and ultimately the control so that you can be protected no matter what happens next. This is your wake-up call. Don't ignore it. Don't wait for the dust to settle, because the next time the world figures this out, the opportunity window to be able to capitalize on this might be closed. So if you want to build a plan for the road ahead, reach out to one of my team members here today. Hard truths, smart money, real wealth. I'll see you in the next one.